Hey, one Tom Gentile, welcome to Tom's Trading Room. You know what we do here. We show you how to find alternative trading strategies other than simply buying and going long. And today, in this video, I want to talk about the 4 types of lists that option traders help me in determining what's quiet, what's explosive, what's cheap, and what's expensive. I'm going to do that right now. Before we begin, though, take a look at the screen you see in front of you here. This is our disclaimer. You can pause this in the recording. In fact, let me get my mug out of the way so that you can see this. 2 things I want to mention real quick. Number 1, stock and options trading has large potential rewards, but also large potential risk. And number 2, I am not an investment advisor. I'm simply here to show you how it is that I scan the markets, spot opportunities, and create alternative risk trades other than simply buying and going long. All right. Now that that's been said, you can read this in its entirety. Like I said, all you got to do is just hit pause on the screen. Let me put myself back over there. And let's talk about these 4 lists. So these lists I want to talk about are the 4 things that option traders tell me. They like to tell me what's quiet, what's explosive, what's cheap, and what's expensive. I'm going to do that looking at tomsoptiontools.com. Now, if you've never used our option software before, then take a look below the description and you will see a free 2-week trial to any version that you like. At this point, what I want to do is I want to move over and I want to look at what's going on in terms of these lists. Now, I want to first talk about ranking quiet stocks. Now, what are quiet stocks? Well, quiet stocks are where we look at statistical volatility. Statistical volatility is volatility based on an asset, and it's based on its asset's past movement. We look at ranges, between a high and a low each day. What we'll do is we'll express those ranges in percentages, and then we'll take a look at short-term days, shorter days over longer days. In this case, if you look at the screen here, I'm looking at the 6-day SV over the 100-day SV. Now, the way this is ranked is that it takes a look at what 6-day statistical volatility is so much higher, is the highest over what it's been doing over the last 100 days. As you can see, RealPage is at the top of the heap today. Looking at it, it had a closing price of $86.78. Its 6-day statistical volatility was 3.25. Its 100-day was 43.35. So in the terms of quiet, it's much, much lower. Its short term is much lower than its long term. When we look at expensive, you're going to see the opposite happen. So I see RealPage on here. Let's take a look at these top 10. I'm going to stick myself right over here. RealPage, Spartan Stores, Eli Lilly, Pfizer, Alexa Pharmaceuticals, Clever Leaves Holdings, Sarepta Pharmaceuticals, Akami Technologies, Yum Brands, and the top 10 ends out with Humana. Now, I see some stocks on here that are actually quite interesting. Let's take a look at Eli Lilly. That's number 3. So if I click on Eli Lilly, here's what's going to happen. I'm going to open a new page. And what I'm noticing is that this is not a typical chart we're used to seeing. It's not a stock chart at all. In fact, it's a chart of statistical volatility. Now, look at the red line. The red line represents the 6-day SV. Notice it was high back here before election or just after election day. Then it dropped pretty hard and it remained low. It popped up again after New Year's, dropped down once again, and right now it's sitting at its low, the lowest it's been in the last 100 days. Now, we look at the 6-day over the 100-day. Look at the 100-day. Remember, this is 100 days. This is like a moving average, but this is moving statistical volatility. It has moved higher over the last 100 days as the short-term statistical has dropped quite a bit lower. What does this tell me? It tells me that this is a quiet stock right now. And if I were to look at the stock itself, I'm going to go and I'm actually going to look at, instead of all SVs, I'm going to look at simply the stock itself. So we could change this to darknet signals, click on update, and what it's going to do is it's going to show me a stock price. And notice the stock price was more moving around quite a bit. All right, in these areas here, we had these big ranges up. All right, big ranges in November, big ranges in December, big gap and move higher in January. But look what's happened since earnings. The actual highs have gotten lower and the lows have gotten higher, and it's consolidating. Now, The great thing about quiet stocks is they could be poised for a big breakout. That's why I like to look at this list. So once again, other quiet stocks on this list include Spartan, Eli Lilly, we just looked at, Pfizer, Alexion Pharmaceuticals, Cleverleaf Holdings, Sarepta Therapeutics, Akami Technologies, Yum Brands, Havana. There's C.H. Robinson, number 11. That is our quiet list. To look at the next list, which is the expensives, I'm going to come down, or explosives, I'm going to click on explosive. These are the two lists we have in SV, Statistical Volatility. Now, what is the explosive list telling us? This is the ones that have the 6-day that are the greatest above the 100-day, as you can see here. Let's take a look at number 3, NetApp. So NetApp is a $62 stock. Its 6-day statistical volatility is at 118.03. These are percentages. Look at the 100-day, 42.15. That means it's trading at 2.8 times. That means the 6-day, 2.8 times the 100-day. It means it's moving around a lot is what it means. So if I go click on NetApp, what could be causing all the movement? Well, when you take a look at the volatility, it's showing that all of a sudden everything jumped right after earnings. So that tells me that this was a stock that jumped after earnings. All right, so again, I can come down and I can take a look at the actual stock itself. Let's go see what the stock was doing in the last week or so. Yes, notice that it was moving up. It got a little bit higher in volatility, but after earnings, it dropped the very next day. That caused a surge in the short-term statistical volatility. Okay, now let's talk about what cheap and expensive are. Cheap and expensive are based on not on statistical volatility, but cheap and expensive are based on implied volatility. So as we're looking at statistical, which is explosive and quiet, these are based on the stocks. These 4 lists down here are based on implied volatility. I want to show you 2 of them right now. The expensive or 1-year list. This is going to take a look at 1 year of option prices, and it's going to put it in chart format. And we're going to be able to see in that year what stocks are trading on their highs for the year in terms of option premiums and what stocks are trading on their lows for the year in terms of option premiums. Let's start with the highs. These are the expensive options. These are the ones that people are paying up for option premium. YY Inc., number 1 on the list right now in terms of its implied volatility being here's high 113, here's low 46, and here's current 91.29. Amplifies here at number 2. MicroStrategy number 3. EBIX. ARC Innovation. That doesn't shock me. With all the news around Cathie Wood's investing strategy and crowding into certain sectors, ARC is gonna be in here. At least one of their ETFs is going to be in the top 10. Baidu, C Limited, Splunk, Zeta Corp, and Stitch Fix down at the bottom. So let's take a look at, I'm going to look at Stitch Fix. I haven't looked at that one in a while. It's in our top 10. If I click on Stitch Fix, what I'm going to see is that the implied volatilities, these are the option implied volatilities. Now I'm looking at the last 100 days, but this charted it over the last year. So let's change this to 250 trading days. Going to update Stitch Fix. You can see here, this was its highs. It seems to always make highs in its short-term volatility right before earnings. Now, the other thing we notice is that the lows all seem to come between earnings. And we are not as high as we've ever been. But when you take out the red line, you start looking at the blues, the purples, etc., we are on the highs. And so when you look at the implied volatilities of these at-the-money options on average, it's telling me I don't want to be a buyer of calls or puts if I'm bullish or bearish on Stitch Fix. I'd be better off buying spreads or even selling premium if I want to go long or short. That is what the options implied volatilities, these expensive rankings, tell us. Now, let's finish up this video talking about the cheap options. What are cheap right now that are out there that I could buy if I were bullish or bearish in terms of calls or puts? This is the ranking of cheap options where their 1 year implied volatilities, you see the high, you see the low, and where is it currently? And most of these are closer to the low than they are the high. Moderna had a high of 192.23, a low 68.88, and it's currently at 70.48. We see JetBlue Airways on here. I see a lot of things on here, but what I do see is Capital One, Cinemark. Let's go look at JetBlue Airways. The reason I want to look at this one is because we were on a live stream recently. I was talking about the travel sector, and I was talking about Southwest and Delta. I didn't have a chance to look at JetBlue, so I thought I'd do it here on this video. Let's take a look at JetBlue, and what we're looking at is the implied volatility of this company. Now, keep this in mind. You know what was happening a year ago? We had coronavirus, and we had that spike that occurred in mid-March. That's what you see when you see these implied volatilities go from down here below 30 to up near 280 before coming right back down. You take this spike out and put us even in the 150 area, and you still see we are near the low. We are much more near the lows of the last year than we are near the highs. It tells me that if I am bullish on JetBlue, call buying might make sense. If I am bearish on JetBlue, put buying might make sense. And the reason why is because these options are as cheap as they have been in almost 1 year. So when you add all this stuff up, guys, and you look at what's happening with the markets this week, talking points really were coming at the beginning of the week is that, we had stocks that are giving that short covering pop. But is this short-lived? We know that BTC continues to rebound from its weekend losses, but it is tied to stocks right now. So as the stock market's moving higher, Bitcoin and Ethereum and their counterparts are also moving higher. And the big takeaway here is if you want to look for explosive stocks, we found a few in our rankers. And if you want to look for quiet stocks, cheap optionable stocks, and expensive optionable stocks, you now know what is in that category for this particular week. Hope you enjoyed it. Like us if you found this information helpful, and subscribe and ding the bell, and you'll get more videos like this as soon as they're released. I'll see you on the next one. Bye now.